Joining us right now is Conservative Member of the European Parliament, Kay Swinburne. Ms. Swinburne, good to see you. Thank you so much for joining us.
Morning, Maria.
Let me first offer you my condolences to you and your colleagues after that horrific murder last week of Joe Cox. We send you our condolences this morning.
Thank you. And there is a vigil this afternoon here and across the whole of Europe for her. So I hope many people will join in on that.
Kay, did the murder change sentiment around the potential to leave?
I think it's definitely changed the tone of the debate. I think it had got fairly obnoxious at times. It had got very, very vitriolic in terms of the rhetoric. And I think it's toned down over the last few days. I think the couple of days that we took in her memory away from campaigning actually allowed people to actually take a step back and to think about the issues more and, I guess, play the ball rather than the man again.
Let me ask you, you have been very clear that you would like Britain to remain in the European Union. However, you still would like to see reform, that you believe the entire region needs reform. Why do you think Britain should stay in the EU?
Well, I cover financial services here in the European Parliament, so we do global financial regulation and how we actually put that on the statute books for 28 member states. And for me, it's very clear that the benefits for financial services are in working together as a bloc of 28. That way we can lead on financial services and London can maintain its global financial status. But if we actually leave, the problem I have is that obviously the City of London accesses those 500 million consumers, particularly for financial services and professional services. All of that potentially is put at risk. It's put at risk because that single market is only available to us, not as a free trade area, but as a single market, because services are included, whereas in most free trade agreements, it's only about trade in goods, not services. So London, for me, is at the heart of my concerns, mainly because I'm a former banker and now a politician dealing in that area. But I also understand the concerns in my constituency, which is heavily manufacturing-based, where we know that almost all of those firms are actually global firms who have operations in my constituency purely because they access a single market from there. And they've all said that their future investment plans are very much up in the air due to the uncertainty as to what our future relationship would be.
Okay, so we know that financial services is going to have a huge impact if, in fact, we were to see a vote to leave. You've spoken a lot about this single market, and the importance there is because it's 500 million people in the Eurozone.
It's the largest economic bloc in the world, but also it's not a free trade area. It's not just a customs union for goods, which is what most free trade agreements are. This actually includes all services. So we can actually sell our professional services, our financial services, and our architect services, any type of IT service, all across those 508 million people. It's really important that we understand this isn't like any other trading area in the world. It is unique, and we have direct access to it right now. But we have all the benefits of that market without actually having to have all of the drawbacks. We're not part of the euro as a currency. We're not part of Schengen. We're not part of any of the law and justice and immigration components of the EU rules. And so we actually have what I would consider to be the best of both worlds right now. And it's very difficult to see how we could negotiate anything like this from the outside.
So you know, we've been talking about outflows should the UK leave the EU. You're expecting bankers to move employees to continental Europe. So you expect job cuts. Give us the implications of a potential exit from the EU. I know that the UK has 2 years, though, to do new trade deals and new regulations. Is that not enough?
We have 2 years. 2 years is what's in the articles in the treaty. But unfortunately, the problem we have is that almost every trade deal that has been concluded with a European partner in the last few years has taken on average 7 years to conclude. So 2 years is a very short time, not only to conclude arrangements with the EU as trading partners, but also with 53 other regions around the world that currently have a free trade agreement with the EU as a bloc. And so all of those would have to be concluded within that period of time. And it's going to be very difficult to see how we can do that. We don't even have a seat at this point in time ourselves on the World Trade Organization. And so it's not even as if we can just resort to the WTO trading rules for the interim period. So there are some big questions here. But as well as that, I mean, I've dealt with global financial regulation, and I've just gone through all the EU-US issues as to whether or not we have comparable legislation. The idea that the UK, because these have come as regulations from Brussels, would have to start from scratch. How can a global financial centre maintain that position if we have to start going through effectively what do you have as Dodd-Frank and what we have as EMIR and MiFID all over again on derivatives trading? When London is so important, it's really difficult.
That's a really important point. So you think 100,000 jobs will be affected, companies will be moving jobs from London to continental Europe. But this starts with immigration, Kay. What kind of reform do you want to see in the European Union? Because you yourself have said it's not perfect and it needs to change.
Absolutely, and for me, this is the largest economic bloc in the world, but it's certainly not the most competitive. And we need to get back to actually finding the tools and levers that we have that make Europe really strong in terms of jobs and growth again. And we're starting to see that. We've now got one of the largest funds created. It's a private-public partnership of some 315 billion euros worth of investments into high-growth innovation. And that type of fund is what we need to see much more of. We need to see less red tape. The reforms have started, but they're not going fast enough. And so we need to get everybody back on board to make sure that Europe is actually one of the leaders in innovation, that our entrepreneurs are freed from red tape, and that we actually get back to a much more of a trading and services area, rather than actually focusing on some of the more political messaging that's been going on over the last few years. But of course, the decision back home is head and heart. The head may actually be saying the economics work and that we should be staying in, but the heart is that actually we quite like to be British. So for me, I have a challenge of trying to persuade people we can be very British and we can lead from within the EU. We don't have to leave in order to be British.
Right. Who benefits should the UK leave? Does new inflows of business and people and money go to Germany? Which country really is on the beneficiary line should the UK exit?
Well, roughly half of our foreign direct investment right now comes from continental Europe. So that 50% is likely over the medium term to not be committed to the UK. But we also have very large numbers of car manufacturers, and we have people like Airbus, who are part French government owned, who would be very unhappy at the long-term prospect of having the wings for all Airbus aircraft made in Wales rather than actually made back somewhere on mainland continental Europe as part of the EU. So there are some very serious implications here. By the way, the 100,000 jobs is not my estimate. That's actually a London Stock Exchange estimate for the impact solely on the City of London for moving all euro-denominated trading and post-trade back to a Eurozone country. Yeah. And so those types of jobs will directly go back, I would imagine, to Frankfurt.
Yeah,
France are pitching for them right now. And Ireland is doing a pretty good job on the asset management side of things. Yeah, but actually, I think Germany, France, and Ireland will compete.
That's a really important point, because you are going to see bankers move employees and entire trading desks to continental Europe. Kay Swinburne, great to have you on the program this morning.